Hi, Graham Healy again from Trade Canary Australia and New Zealand. This is part 2 of the video I've just completed, and in this video we'll have a look at the actual Trade Canary software, the dashboard part, and in particular we'll have a look at cash cows, not in detail but just to give you a little bit of an idea what Trade Canary can offer. Okay, this is part 2 coming up. Thank you for watching again. Graham Healy over and out. Let's go straight to Trade Canary. Now, where are we here? Okay, now this is the dashboard of Trade Canary, and it's self-explanatory. I won't bother reading through it in detail. I just want to gloss over that at this particular point in time. But as you see, the dashboard, digging deep, where it's got sector, market, breadth, unusual options activity, your lists, you got volume, proceed, price, growth monsters, and cash cows. We'll look at cash cows. Finding opportunities. This one will show you options trading. Insider trading, you can have a look at what I just discussed about insider trading. Watch lists, I've already discussed watch lists and what have you. And then our picks, I'll go through that in a second. And then the Trading Canary trading, the training for Trading Canary. So just as we go through, this is this obviously the dashboard page. There's the training seminars. Every training seminar is actually recorded. And then you've got the cash cow. I'll go into that in a second. Range traders. Now that's, I'll just do a separate video on that. I don't want to cover that just yet. But as you go down the page, you got momentum bullish signals, and you've got like baseball cards, what they call baseball cards of individual companies that meet what they call the blue line, red line criteria. I'll go into the meaning of that in an individual video. So then you go down further and you've got the sector breakdowns and what's happening in the sectors, right? So that's the overview. And then let's just go on to cash cows. We'll go to the list and we'll have a little bit of a look at that, and we'll see if is that going to allow me to do that. Yes, it is. Now, I love these pictures that Eric does, the cash cows. Now, I'll just read this out again. Cash cows on sale. The list looks at for companies with free cash flow. Free cash flow represents the cash of a company that's left after paying all its operating expenses. In other words, the cash flow positive, right? Now, we take a list of the top free cash flow generators, then we sort by companies with less than 3 price to book. So that's a factor of 3. I won't go into that just now, but there's full explanations on that. It's like ratios. So we can find future movers before they move. Now, just repeat that. So we can find future movers before they move. In other words, they're looking at the diagnostic material of a potential cash cow. Now, with market caps of over 500 million, some of these companies are worth up to $1 trillion, but more than 500 million. That's a fairly substantial company. To keep it safe and liquid. In other words, it's got to be cash flow positive, and it's got to be a reasonably large market cap company. Then sort the percentage below the 52-week high price. So I can go into that in detail in another video, but the 52-week highs or the 52-week lows, if they're right at the 52-week low, that means the only place they can go is high, or if they're the 52-week high, the only place they can go is low, or they can go to a higher high, and we'll explain that in detail in various videos as we go along the way. So that's for the beginner videos. I'll explain all that. Now, the cash cows look for the highest free flow generating companies with the lowest price to book. We'll explain that later. Lowest strength ratings and the furthest below their 52-week highs. Now note, the furthest below, I'll just read that. Look for the highest free cash flow generating companies. In other words, they're all cashed up with the lowest price book. Now, that means book to value is a ratio that Eric and the team have worked out. If it's compressed, we know it'll increase rapidly. The lowest strength ratings and the furthest below the 52-week highs. In other words, their graphs are right down low, but they're cash flow positive, and they've got a potential to spring up very quickly, if you could understand that. So, okay, I won't bother reading all that. You can read that yourself. And then you've got all the companies here to have a look at. There's a list that Trade Canary. There's another list beyond this list, but this is the main list on this page. And so you look at this. We'll just have a look at this top company here. We have a look at, okay, this one here, TOL, which is a real estate and construction. It's minus 28% below its 52-week high. So it's dropped considerably. So out of the whole page, this one, 28.5% below its 52-week high. Free cash flow, 347 million sitting in the bank, all in cash. That's all right. Price to book, if it's under 3, that's 1.4. So it's got a lot of scope to expand upwards. And price to growth, there's definitions for that. I'm not going to go into it in this particular video. That little icon there gives you the options. You go straight and have a look at the options chart. And, this is real estate and construction. And if you click that, suddenly Trade Canary will actually, was thinking a little bit, processing the data. Trade Canary will actually bring you up the profile of that company. Now, when you have a look at that, there we go. Fundamentals is 10 and the technicals is 1. So the fundamentals is basically, is it a profitable company? Look at this. It's green. And remember this term, it's green on the screen. So they make money, debt's under control, revenue increased in the last quarter, earnings increased from the last quarter, generated free cash flow, price to book is attractive, price to sales is attractive, price to growth is attractive, positive income, good margins, below average analyst price, no insider buying. So out of all that 1, 2, 3, 4, 5, 6, 7, 8, 10, 11, out of the 12 criteria, it's green on the screen for 11 and 1. So what? If you get maybe out of 12, you get 10, 8, 9 green on the screen, it's a good possibility to do further research. Up here, you can put a watch on that where Trade Canary will contact you with what's moving. You can have a look at the chart. You can have a look at the options. This gives you an overview of the company. The market cap is 11 billion. So it's not a small company. And you've got the 1-year chart. The weekly chart for 1 year. So that gives you an idea of the pattern. I can go into charts later. Now, this is interesting. All right. I'll stop the video on this. This is what Trade Canary is all about. All this data is focused into graphs. Now, you see the purple line down here? That's where this company is right now. Well, it's probably about here now, but here it triggered a buy signal because its industry strength versus the total industry strength. So the total industry strength versus this company, the total industry strength, or the average of all the companies in this particular sector, is the blue line, right? And TOL, which is a ticker for this company, is represented by the purple line. And then you can see here, its strength ratio there is around about drop down to 20. And here it triggers the signals, the buy signal. So in other words, if we were to buy a call or put, not put, but a call which goes up, here, the chances of us having a very strong trade based on the data is just increased to about 90%. So we're not just reading charts, we're reading the data through graphs that are filtering hundreds of thousands, if not millions of data points, and has been honed down into graphs which we can read. That is Trade Canary, ladies and gentlemen. That is the diagnostic tools that we've got available to us, which no one else has. They're all just sort of doing educated guesses, where this is, yes, we're doing an educated decision based on data. We're not really guessing. See, a lot of people do stock market trading out of emotion. Oh, look, I'm making money, I'm not making money. Oh, gee, I lost a lot of money. We don't care. At the end of the day, we're doing diagnosis based on fact. So that's what I've learned with Trade Canary. We just take the emotion out of it totally. We don't care what's happening out there in the outside world. We're analysing the figures, the data. And that is where it's at, ladies and gentlemen. So I'll leave you on that. You go down further and you'll see the put to call ratio. So in other words, the blue line is all the calls represented in graphs. You put a on the line here, you've got $120 value. Over $1 million has been invested in that particular point of the calls in that particular trade. And of course, you've got the puts on the opposite side, which is the graph going down. The calls are the graph going up, right? And then the company overview. When you see all green on the screen, just remember, green on the screen. If it's red on the screen, it's in the area where it's going down. Green on the screen, it's when the area is going up. So all those ratios that I was talking about, here's a full explanation. You can read that yourself. I will go through that in detail in other videos. And here you've got your 52-week price history. You see where it is. It's compressed down. That little yellow indicator there says it's, the 52-week high is about 165. The 52-week low is about 93. It's sitting here probably around about 100. And then you've got what they call a range trader. Now that is for what they call channel trading. And I'll go into that in another video. But here the indicator says puts. So it's doing channel trades where they just can trade just within the channel, whereas averages are like it's average, the high average, it might be just doing a little curve like that. The highs and lows are very limited, so they're represented by 101 to 109. So it's going 101 to 110, and it's oscillating in between that. It might be consolidating for some time like that. So those particular range trades, there's an education video on that in Trade Canary. There's various angles and strategies that you can trade the stock market in the particular companies and what have you. But this Trade Canary it's all there. It's all there on the screen. You can make quality decisions on what you will decide to, yes, that's a good trade. No, I'm going to leave that one go for a little while. Or it's right at the bottom of the curve. That's when a lot of the times that, it's a strong company right at the bottom. It's it may be the 12-month or 52-week low. It could be a 5-year low, and it's got the potential to shoot to the roof. They're the ones we're looking for. Here gives you can see this is all very simple graphics. If it's all blue, they're all doing well. As you can see, it's all blue on the screen here. The little bit of red there, that's nothing. That's, when they're in the red, it's in the red. We're in the blue, they're making money. And then here you see the little red arrows is for insider trading. And you'll see here the director, Mr. F. Stevenson, East. I think that's his last name. The Americans put it back to front. The Australians put it the other way. On the 19th of the 3rd, 2020, he bought about $500,000 worth of shares at $17.07, almost 3,000 shares. So, all this, the insider positions, the company CEOs, all that. And this part here is it's a summary of all the financial magazines, the financial advice, and the financial reviews on this particular company. So rather than trying to read 7,000 magazines and listening to all the noise on the so-called financial reports, you just look through here and you go, oh, it's all green on the screen, and you have a look for the high percentage relevance. So you've got 72%, 63%, 31%, so 78%. So 78%, that means there's commentators in the order of a algorithm average of 78% are commentating about this particular company. So somewhat bullish news. So we just flick on that. It'll bring up somewhat bullish news. So you can just read what that says about the company. And, you know, sometimes they do some really good summaries, right? So that's available there, rather than trying to, you know, buy the news agency out with all financial books and get yourself confused. It's all on one page. So at that point, I will go back to the Trade Canary dashboard, and that just gives you a little insight into what's available in Trade Canary. I'm telling you, it is the best diagnostic tool you'll ever look at. And I knew when I saw the opportunity for Trade Canary, I thought that's what I want because of my diagnostic sort of mentality, and it enables me to make the trades with just with qualified information. I'm not making the trades through guesswork. I'm making the trades through qualified information, and it's qualified with real data in real time with real graphs. So that's Graham Healy over and out. That's this video, and I hope you enjoyed that. I'll break down other videos and just break down how to do various things, and it'll all dovetail in with the education system that Trade Canary offers, but it's more focused on someone who's just beginning. So in your own mind, just think 3 to 6 months. 3 to 6 months. Okay, so if you're starting, you'll need 3 to 6 months to really be able to understand exactly what you're doing, to get the confidence to be able to really trade confidently on your own. That's what I say. It will take 3 to 6 months. Okay. All right, Graham Healy over and out. Have a great day. Thank you for listening. Okay, thanks for listening. It's Graham Healy from Trade Canary, and that's the end of part 2. More videos to come. Stay tuned. Graham Healy over and out.